One of the instruments that gained on the immediate threat of a Russian incursion into Ukraine was gold. You can see that gold on the weekly charts just pushed above this trend line going back from September 20th, December 20th, and cutting across the top of November the 21st. So this gain in gold is a very interesting pattern that's going on right now. So let's just see why that is. The reason gold gained is you see this drop in real yields. I've got here a TIPS, which is a proxy for real yields. And generally speaking, when real yields drop, that supports gold higher. So what's been causing that surge in gold was the sudden fall in real yields. And the reason real yields fell is because there was a bid into US treasuries on risk-off moves. So that heavy buying of US bonds causes yields to fall. Inflation, we know, is very high from last week's print. So that means that real yields drops. And that is why we've seen gold push above that weekly trend line. So one very interesting reaction to look out is if there is a sudden move by Russia into Ukraine, one of the main beneficiaries is likely to be gold in the short term, as bonds will be bought further on risk-off flows. The high inflation in the US will mean that bid into bonds will mean that real yields will continue to fall in the near term. Now, the only obvious risk here is that also the US dollar can gain on risk-off flows. So that can limit some potential upside for gold if the US dollar sees strong bids. Now, if you look at the seasonals, there's this quite unusual short-term seasonal pattern in gold right now the last 15 years. But towards the end of February, between February the 15th, February the 23rd, the gold has gained 11 times in the last 15 years. Average return, 1.25%. Annualized return, a very impressive 80.83%. So don't forget, HYCM clients can access the SeasonX product in order to analyze an incredible 25,000 different currency pairs, indices, commodities, as well as individual stocks, which are being added to all the time. So please do contact your account manager for a free trial to get started right away. The major trade risk here is, remember, the US dollar can also gain on risk-off flows, and that can mitigate gold gains in the near term.